Hi guys, this is Ray from nextforextrade.com, and today is the Friday the 26th of July. So as I discussed in another video, I don't really look to trade on Fridays. I try to avoid it, simply because of the having the likelihood of holding positions over the weekend is not something that I like to do. Leaves you, it's just a greater risk. But what I'll do today is, in fact, go over a position I took yesterday. So you can see I'm flat at the moment. If I go to the account here, there was a position that I took on a USD CAD, and we can see it's just over break even that I exited it. All of these details as well are available on the link for the My FX book. So you'll find that in the description. So everything that I'm saying in these videos, every trade that I take, you can look at and see how it's performed. So what I'm going to be trying out some new stuff as well in terms of streaming. So just you'll have to bear with me in case there are any issues as that goes on. But if we let's just have a look here. Okay. So yeah, we can see the USD CAD as it is at the moment. So what I'm going to do is just bring up some screenshots that I took just prior to and after the position was taken. Unfortunately, I wasn't able to record the entry and exit, but a lot of it is here for records. And this is I'll just touch on this as well. I mean, it's super important when you're trading to why is it not showing a cursor? Oh dear, might have to do this a different way. All right, we'll see how this works. Yeah, when you're trading, basically make sure that you for good record keeping, what I always suggest to my clients is to basically take screenshots of your entry before and your entry after. You can, of course, use, there's software that you can use to historically play back the market, but really that is not as good as taking a screenshot of exactly what the market conditions were at the time you took the trade. It's just because it captures what you were thinking, what you were seeing at that time, and then when you go back to look at that in retrospect, it's gonna be a much more helpful learning tool than just having the hindsight of knowing, oh, this happened, let me just reverse the market. And the way that I trade as well, that you'll see, it's all based on the part of it is time frame correlation. So this means that let me just go back to the charts here one sec. This means that what I'm looking at is for all of these to be saying a similar story. So if you use something like, I think TradingView has a historical kind of option. You can look back and replay the market, but that isn't always going to be as helpful, because what you need to see is what all those time frames are saying at one point in time. You don't want to just see what had happened on the daily and not see at the same time what was happening on the lower time frames. So I'm laboring the point, but it's super important. If you can get into the habit as part of your record keeping to take screenshots before you take the entry and after you've exited, it can be super helpful in your learning process, because you've got a record of how you're thinking, why you entered, and it's going to be, it's going to expedite your learning and lead to profitability in the long run a lot quicker than not doing that, just trading and forgetting, what happened and not learning from that lesson. But I'm going to try and bring up what the entry was. I'm not sure if you're going to see my cursor though. Like I said, I'm just trying out this streaming software at the moment, so we'll see what happens. So in this instance, we've got the daily, just in case you don't see just the screenshots, I'll just have to, my cursor, I'll just have to describe where where I'm looking at. So in the bottom left, there's the daily chart, and we could see that at that point it was looking very overbought and signs of potentially moving down in a downtrend because of interacting with the upper standard deviation channel, kind of toppy type candles as well. When we go to the 4 hourly, which is in the top left there, we can see as well that there were signs of it being overbought, potentially moving lower as well. And look to the hourly to the top right. This wasn't super great, and I would have mentioned this yesterday in what in the setup that I was describing, because I was waiting for some criteria to happen. But the hourly wasn't super great in that it was still in an upward kind of trend. It was showing higher highs and higher lows, and additionally there was an area of support, and I sold at that support level, which isn't a great idea. Generally, you want to sell off of resistance rather than selling off of selling into support. But it was the strength of what I was seeing on the other two time frames that helped guide that decision to short at least at 1%. This wouldn't be a move that I'd be happy doing a full 2% on in terms of risk, but a 1% risk at 1-to-1 reward to risk was enough for me. The stop loss was placed above the previous high that we're seeing both in this price structure on the hourly and what would have been the daily. Looking back to the bottom left, the daily candle, you can see that reversal candle that happened a couple of days ago. The stop loss was above that as well. So there was good logic in that positioning. The hourly wasn't great in terms of the price action, but it was enough to warrant a short. So with that in mind, I did take the position, and it was a 1-to-1 reward to risk. And things started to go, the price action started to tell a different story after a little while. So I'm just going to swap to the entry. Yeah, I think that's it. Okay, so what had happened if it's gonna be tricky if you can't see my cursor, but the 15-minute, which is on the right hand side and it's the one in the middle, on the 15-minute, what happened is, although the price had started to show lower lows and lower highs, which was what I wanted, what happened is there was a big kind of spike upwards. It moved outside of that standard deviation channel. It was almost probably about 2 standard deviations away from the price. So although there was still context to be potentially short on this, I decided, right, the price hadn't done what I wanted. It hadn't continued to make lower highs and lower lows, and for that reason I moved my stop to just over just beyond break even. And the result was, as we can see, let me go back to the live. Okay, it's going to be a bit easier. So yeah, the result is that basically I came out just over break even, and just protected my capital. You know, I could have stayed in that stubbornly and wanted the market to move lower. And we can see now that it has, in fact, started to move well away from where my exit was. So in this instance, it was a good call. Even if it hit my stop loss, I wouldn't have been unhappy, because I was happy in the analysis that I'd done beforehand to ensure that things were at least in my favor. But with my exit, which would have been so I exited on this candle here. This is the hourly. I exited here at this price, and it's almost on the button. It moved away and pulled away higher. So that was some good kind of, I don't know what you call it, what you want to call it, disaster management, risk management. It was just playing the odds as best I could in my favor. So in this instance, breaking even, I was happy with. And a lot of the time, really, that's what you want to do. You want to do all your thinking ahead of time. You don't want to be in this trade and be thinking, shit, what do I do? How do I play this in terms of, where's my stop loss going to be? Now, I did manage this in terms of having to make decisions when after pressing the entry, but it wasn't kind of emotional decisions. It was based on what I was reading by the price action in the market, and reading the price action, it told me what to do, how to manage it. There are 1,000, million with different ways you can manage it, but this, because of the way I do this, kind of ingrained in my approach to trading. So I don't per se have a written kind of formula. It's very discretionary, but it's based on reading what the price action is doing. So if it's not doing what I need it to do, which is producing lower lows and lower highs, simple price action theory, then there's no reason for me to be in a trade any longer. The conditions have changed, if you like, and the stop loss placement, which was above these highs, these highs here, gives me enough wiggle room, enough breathing space to manage that within a timely fashion. There's no rush to it, really. It's just looking at what the price is doing and reacting accordingly. And that's very different to doing something like, moving your stop loss by giving it extra wiggle room. In this trade, at no point is my risk going beyond that 1% that I've initially stated in the trade setup. When I've set my stop loss here, above here, and was willing to risk 1%, the loss that I can achieve is always going to be less than that going forward, right? Because it might be that I take out, if the price action tells me to take out a position earlier than before hitting the stop, then I'm taking a lower loss. If the price moves into profit, as it did, I think, in the AUD-CHF trade earlier this week, I can use that stop loss as a protective stop to basically protect profits. But I'm not risking any more than that 1% initially. I may, take a lower profit. I may take a lower loss, but it's never more than that percent I've stipulated from pressing the the buy or sell button from the get-go. And that's important to remember. Never give your stop loss extra wiggle room beyond what you've planned to start with. That's a super important point to clarify there. So what else can we cover? Let's just see, 13 minutes. So yeah, at the moment, let's just have a look through some of the setups again. Friday, so definitely not looking for any positions today. AUD CAD, and in this instance I'm looking at the daily to guide my decision as to whether to potentially trade. This for me is needs a bit more value for money, so it needs a bit more of a pullback. The trend is definitely down, but it needs to pull back. This is actually an okay price action, but it's Friday, so I'm not going to enter this position. But if it's looking something similar on Monday, I traded this week. You can see there, made some profits off of AUD-CHF, but this is a bit later in its move as well, and it is finding support off of these kind of levels here. You can see from that previous zone. I did mention in when I was taking profits before early in the week that I did anticipate that there could be some support here. Now I don't know how, if we go back, there may be some you can see that support goes back, historically as well. So I anticipated that there could be some trouble with the price moving through that level, but I'm not sure how much it will hold up because of this downward movement we're seeing here, and the fact if we look at this standard deviation channel here, it's kind of started to break through it. So Monday and well today will be a bit of a pivotal day to just see how this plays out. If this today's candle, which is forming now, starts to break the previous highs, or ends like it is now, then I'd be concerned that we'd be looking at a more kind of deeper retrace in this move. So, and potentially moving upwards for a reversal. So really, for this to be tradable to the short side and be really managing risk, I'd want it to see ideally today break the previous low of yesterday, so move lower, which would give a clear indication that it's moved outside of this standard deviation and past this support that we identified, and then to see signs of it pulling back as well, allowing for an entry to the short side. So that's probably into next week, really, before Tuesday next week, before making any further considerations on that. But we'll just have to see how that plays out. JPY, AUD, JPY. Positioning's okay. What worries me at a snapshot on this, it is obviously if we're deeming this as a downward move, but there is a crazy amount of resistance that is hit there as well, which is good in terms of it potentially moving lower, but it's kind of on the daily, it's hitting some pretty tough support as well. So it's a bit of a limbo at the moment. Similar to what I was saying on AEDCHF, what I'd want to see on this one, AEDJPY, is some sort of a definitive break past this area of support, which would give a better indication that we're going to see something to the short side. So for it to break, and then a better entry, be waiting for it to pull back and then show signs of moving lower again. So let's go on to the next one. AED USD, that's too late really in that move at least. Just going to assess it based on this upward move here. Okay, so you can see what I've done is I'm just trying to think from all angles. How likely is the retrace likely to continue? How likely is the downward trend going to move likely to be? Now in this retrace from the downward movement, it's broken out of the standard deviation channel, so that's good in terms of our argument that it could move lower. It goes back quite a way, so let's just say this is the most relevant move here. What I'd want to see now in this is for it to pull back. All of this is a bit too oversold for me, so it's not a bargain, it's not good value for money. So I'd want to see it to pull back, allowing for a better entry. Two looking here, two sideways, not really tradable. Yeah, this is good. Upwards, higher highs and higher lows. 4 hourly is basically what I want to see is it to break these previous highs, get outside of this standard deviation channel for this downward move, so move past these highs here. That would be a break of structure on these lower lows and lower highs, and what we would likely see on the lower time frames is it to start kind of cycle upwards with higher highs and higher lows. So on this one, yeah, possibly next week. The fact it's finding some pretty awesome support along here as well, move past the previous day's high, past, which would also mean move past this price structure of a lower high, and higher highs and higher lows on the low time frame would allow for a good entry. All speculative until it happens, but something to look out for next week. No, it's too much limbo in there. I mean, obviously you're looking for shorts on that, but it's not ready. No, this is going into an over bought area, but we need to see signs of reversal. So a reversal candle off of that resistance, which would also interact with these previous support here. That would be a good sign to potentially short, but that wouldn't be until Monday, Tuesday. No, positioning on that isn't great. So next, and it's always just looking for quality, really, looking for the one trade, like I've done this week. I mean, this week, there's been, what do we see? So 3. So this one, it's about 40. So it's about 2. Let's call it 200. So 2%, if you like, on the initial capital. So 2% per week. I'm happy with that. I mean, it's not going to be every week. There's going to be sometimes when it's more, sometimes when it's less, sometimes when there's losses, but it all averages out over a period of time. So it's really just looking for the quality trade rather than trying to be involved with everything all the time. Just look to trade quality where you've got higher probability of getting a return on your money and making sure that you're not risking your money unnecessarily. So no, that's not good value for money. Need to see signs of reversal. No, euro is very choppy at the moment. Need to see this move past the low of the previous candle. So for today, I don't like the way that's broken the standard deviation channel on the 4-hourly on this move. I mean, if there's probably not enough time now because it's almost 1 p.m. UK time. But if there were some decent signs of downward movement, lower lows and lower highs on these time frames, that might make that more viable, even though it's broken outside the standard deviation channel. But it looks like there could be a little bit more upside on this, at least until these areas here on the daily. So no, wait and see. No. Again, just looking at the daily here, looking for it to be overbought or oversold and trending. No, not great. Like I said, I'm looking for the ideal setup. Even if it's too much deliberating over, is that right? Is that wrong? And then just pass up. Save the capital. This one, no, it isn't starting to encounter the resistance and potentially create. So this previous support here, it could viably be an area where it finds resistance, and we see a reversal candle, especially in this downward movement they're seeing here on the lower time frames, gives me some indication that this could be quite a tricky area for the price to move higher than. And even though it's not interacting with the top of the standard deviation channel, it's still fine. It's still within this area. There's enough context to consider this is a downward move. This is going to hit resistance, and a move past the low could see the price move lower. So certainly if we see a nice kind of a small candle, toppy type of candle here from today, shorting this on Monday would seem quite viable. No. Again, just looking at the daily. Yeah, I mean, looking for shorts on this, and positioning isn't great. Standard deviation is probably just hitting the bottom of the channel. Yeah, it's just breaking it. No, pass on that. Yeah, it's nicely breaking structure. My problem with shorting this, so I would be looking for shorts on this. My problem at the moment is, firstly, if we're looking at this as a retrace, it's currently just interacting with the lower channel, meaning that it could be finding support there. Also, there are quite strong areas of support that you could be selling into as well. So these previous highs here, previous resistance, is coming into that, and you're selling. As I said earlier, you want to sell off of resistance, don't sell into support if possible. And because that's on a daily as well, you know, that might be something I might let pass on a lower time frame, as I did yesterday. Go back and watch what I was talking about on the USD CAD. It was a lower time frame that I was basing that having to break support, but on the higher time frame, it's just you want to see it, you know, definitively break. So yeah, possibly shorts on this. Nice price structure on the lower time frames as well, but it would need to overcome, if you like, this area of support, so to break through and pull back to allow for an entry. And no, USD CAD already gone over really. No, it needs to see signs of reversal. It's too overbought. Same for USD Swissy. Similar thing for USD JPY. So yeah, going into next week, there could be some decent setups. Definitely a few that I may be, if the price action goes as needed, that I'd consider taking a 2% on. But yeah, we'll join me next week, and obviously we can go over those. If what you've seen has been useful, don't forget to subscribe. Leave any comments or questions. I will do my best to answer those as well. And I will see you next time. Take care. Bye.